EV charging stocks have been making massive gains these past few days, with one exception being Tritium. For example, if we look at EVgo, you'll see their share price was at $2.50 per share just a few days ago, and now it's all the way up to $3.31 per share. So a massive increase in share price in just a matter of days, and you'll see that reflected even more so here with Blink. Their shares were at $2.50 as well just a few days ago. Now those are at $4.44 per share. So an even larger gain on share price with Blink. Now, Blink and EVgo both put out their Q3 earnings these past couple of weeks, so that has certainly been a significant driving factor for these rallies that we're seeing in these stocks. But if you look at ChargePoint, there hasn't been any major news around ChargePoint recently. They haven't put out their earnings yet, and yet the stock is still up almost 21% these past 5 days. So clearly ChargePoint is just kind of being wrapped up with the other EV charging stocks. They're just along for the ride, and you would expect Tritium to be along for the ride as well, but that is just not what we've been seeing. What we've seen from Tritium stock has been completely different from the rest of these EV charging stocks, with it being relatively flat these past 5 days. And what this tells me is that investors have largely given up confidence on Tritium's future potential, especially compared to some of these other charging stocks. I mean, none of these have reached the levels they were previously at, but it seems like investors have at least regained some of the confidence that was previously lost, whereas that hope doesn't seem to really be there for Tritium at this point in time. So I'm sure a lot of you are probably wondering why Tritium is not rebounding like these other EV charging stocks are, and there are several reasons why I believe this is the case. One of them is a fairly recent update Tritium put out about a, kind of an organizational restructuring. A lot of companies will do this when they are in very dire financial situations. And one of the things they've actually announced here is that they're going to be shutting down their factory in Brisbane, Australia. That was their original factory that they had, their first factory. And they're going to be consolidating all of their manufacturing efforts into their newer factory in Tennessee. This is the press release Tritium put out alongside that announcement, and interestingly, they do say that investment in technology development, services, software, and sales will be continuing, with plans to retain and grow Tritium's more than 200-person research and development team and world-class test facility in Brisbane. Interestingly, they are, retaining their test facility there, even though they're shutting down the manufacturing plant. But also, it's just interesting that they're continuing to grow this, at least that's their plan, even when they are so cash-strapped at the moment. I think investors have also been concerned with some of the things Tritium said during their latest earnings call. Tritium's revenue guidance for the rest of this year wasn't too promising, and the company is running out of cash. I think they only had about $30 million on their balance sheet when they reported those earnings, and they are in massive debt already and continuing to borrow even more money. Tritium had also announced they'd be issuing up to $75 million of convertible preferred shares, which would have massive potential to further dilute Tritium stock. So overall, just not a lot of good things happening on the financial side for Tritium. Make sure to check out my video where I go into a lot more detail on Tritium's latest earnings. I go into all of the revenue numbers, profitability, gross margins, all of that. So if you're looking for a more detailed, comprehensive analysis of Tritium's latest earnings, be sure to check that video out. I'll see all of you over there, and thank you guys for watching.